Good afternoon, folks. Welcome back. This is a daily review for Monday, February 6, 2017. Okay, this is the action that we saw for dollar index. We've seen price stay inside of the range defined by 100.30 and 99.50 level. I saw a little bit of upside. Again, noticing all the wicks in here not having any continuation on the upside. So it'll be interesting to see if we see some softness tomorrow. Dollar still looking for that sell side liquidity down here at the 98.90 level. So nothing's changed in that regard. We have to punch up into this buy side liquidity to change gears on dollar. Until that happens, we're still looking for this level down here. Euro dollar, we saw price give back a little bit again. Took out last Friday's low, and price has to stay above this level in here for the bulls. Otherwise, we're looking for a run down to the sell side liquidity below here, and the buy side liquidity still remains as an upside objective at 108.70 to 108.80 institutional level. I got a question in regards to what are we looking for when we look at if the data range is 20 days back, 40 days back, and 60 days back. The first thing you want to look at where we're at in 20 days. Okay, we have this little area down here where stops will be residing below the bodies of the candles in the form of a rejection block. Price has not come down to that. Okay, and we're looking for clues as to what side of the marketplace they're reaching for. We're winding up for another price leg. I don't know if it's going to rebel from here and go higher. I would like to see it do that because that's what we're looking for in terms of bearish dollar. But if we lose this level here, we immediately go back to this level here looking for a breakdown to potentially this low. So that would give us a near-term objective. In the 40-day look back, these same levels still are the most recent areas at which sell-side liquidity or sell stops will be resting. We don't have any voids in the 20 and 40-day, and we don't have any bullish order blocks to be considered because we've already traded into this one here at this level. And we've already seen price react here, and we're also working basically the mean threshold of this one here. We wicked through it today, but then gave back. So I'm hoping that we'll see some rejection and go higher and reach for the buy side liquidity above this candle's high. And in 60 days, same thing. The stops would be below these lows down here, and again the high above here. So all we're doing is looking at where the liquidity would be for the last 20, 40, and 60. And by shading the areas like this, it keeps your focus on the most recent one we contend with, and then the next one out intermediate term and longer term for the 60-day look back period. Pound dollar, we saw it trade down to the bodies of these candles here, right to the pip. We saw the market trade down to its closing price here, 124.24, which is what we have noted. Price came down and hit that to the pip with its low of 124.24, rejected there. Sell side liquidity rests just below these equal wicks, so it'll be interesting to see what we do here. It may stay in consolidation and allow euro dollar to rally, or if we lose this here, we have to go back and start looking at these bodies here for the sell stops on the downside from that level. It could wick down through here and then reject and go higher. That's another scenario that we have to watch. So that would have to be monitored on an intraday basis, which is kind of like outside the scope of this month's discussion. But nonetheless, if we do see upside resuming, we're looking for the buy side liquidity resting above these candles bodies up here. Dollar CAD, we saw price rally all the way up into the candle's close here is at 131.36. And today's high coming in at 131.36, so exactly where we had it mapped out. You can see that's the case here. It went right to it, to the pip. You can see it traded right to it. Let me zoom in a little bit for you. And right here's the high. Trades right to it, 131.36. And this candle's close, 131.36, right to the pip. So we didn't get above it. We went right to this level, but we come back off that level a little bit. So it'll be interesting to see as well, like tomorrow, what we see for the dollar. I'd like to see this one reject here and trade down and turn into like a doji of some sort. not that I trade the doji pattern, but I like to see it just completely turn into a wick and go down here and punch this 29.35 level. If we do not get that, and if this, all we were doing was coming down below these equal lows, as we indicated last week, we will be looking for price to trade all the way up into this candle's opening, which is 132.63. And again, that would be in line with a reversal of sorts for the dollar index and higher prices for it. Aussie dollar prices moved a little bit lower off of this high in here. I still think we're going to punch up and grab the liquidity above that 77.45 to 77.60 level. I think it's possibly what we're going to be reaching for. It could be a 77.80. So we'll see what this pair wants to do. On the downside, I think we'll find some support at 75.91. So that level, we'll have that level noted as well, and we'll take this one off. So that's the downside support level we would expect to see. Also, it lines up with two down candles, which will be a bullish order block. So it could trade down to that 75.90 level and then resume higher longer term. On a weekly basis, it does have some buy stops a little bit higher than where we're at right now. Euro pound, still stuck in the range. I think that we'll probably see a punch up into clearing out these bodies and run that liquidity out. We came down into this down candle's high comes in at 85.94, and the low today came in at 85.92. So it went 2 pips below into this down candle and showed a little bit of rejection. So it might be favorable for another press higher. We'll see. I like the idea of this little gap in here filling because we only had an exhaustion gap up and then traded lower. So we would be looking for price to want to trade back into this. And we had this weeks ago, but it just simply never came back to this area yet. So we're going to have it now added back into our charts. So we might come up in that area here and fill that in a little bit. And on gold, gold has just recently, as at the time of this recording, has traded into the area we called for a couple weeks ago for gold bulls. 1232.50 being this candle's high right here, and then the low on this candle here, 112.40. That was framing the fair value gap in here where we'd expect to see price to be balanced out and deliver price on the upside. So we're looking for 12.40 still as a upside objective for gold. A nice little rally for that. Silver, we're looking for 1800. X marks the spot basically. We're looking for upside objectives there. And that's it for today's markets. The tomorrow's session will be at 9:30 a.m. It will be about a 45-minute presentation. It's going to be on the Kiwi dollar homework assignment I gave you in one of the lessons. So we're going to be specifically dealing with that. The session will begin promptly at 9:30 a.m. Usually I wait a couple minutes, but I'm going to get done tomorrow. I have an appointment. I have to meet someone at 11 o'clock, so I want to make sure I get done. So be aware of that. And I will greet you all then tomorrow. Tomorrow's live session recording is underneath this link, and you can subscribe and register for that session for tomorrow, again at 9:30 a.m. Eastern Standard Time, about 45-minute duration. Until then, I wish you good luck and good trading.